If Mr. Draghi is appointed, Mrs. Yellen has delivered in line with market expectations. As the Fed has just begun its tightening cycle, what could be expected from the central banks next year? First, the Fed. The key word is gradualism. The Fed macro scenario is cautious but positive. Fed expects a 2.4% GDP growth and a 4.7% unemployment rate in 2016. It will take a couple of years for inflation to be back to 2%. Under such a scenario, the Fed expects a gradual rise of its key rates. Dots reveal 4 potential rate hikes next year. My feeling is the Fed will be very cautious and will probably not hike as much as dots tell us. Thus, Fed fund rates could stay below or around 1% for a long period of time. Will the ECB enter QE3 next year? While measures adopted in the latest ECB meeting were significant, Mr. Draghi's communication was below expectations. Nevertheless, as inflation in the Eurozone will remain low and recovery only progressive, the ECB will probably launch a QE3 next year by increasing the maturity and decreasing further rates served on bank excess reserves. The consequence will be to depreciate further the euro. Bank of Japan was reluctant to ease further, but inflation is back on low level and the economy is not in a good shape. BOJ has recently adopted some technical measures, such as increasing the amount of ETFs it will purchase. The Bank of England is in the middle of two opposite forces: low inflation and decelerating growth in one hand, and on the other hand, wage pressures in a tight labor market. The bank has already postponed its rate hike and no change is expected before the second semester 2016. The China's central bank will continue to ease marginally its key rates and to lower the reserve requirement ratio. Moreover, PBOC is also engaged in a reform of its currency management, which would progressively depeg the yuan from the US dollar in the medium term. Let's conclude. Despite the head of the zero interest rate policy in the US, monetary policy remains accommodative and only gradual rise is expected from the Fed. Outside the US, global easing should prevail and the ECB and BOJ will probably take the lead in this process. This monetary environment will be positive for risky assets but will generate more volatility on currencies.